Ladies and gentlemen, welcome back to the Crypto News Weekly Roundup. Your hosts here, Matt Zahab and Rachel Wolfson. Guys, what a week. This was one of the most depressing weeks we've had in a while. We're going to get into it all, but before that, Rachel, how you doing on what is easily the bloodiest and worst week of the year so far?
Well, I'm doing well, Matt. I'm hanging in there, and I'm just telling myself that now is an opportunity to buy Bitcoin. So that's how
Yes.
I'm thinking about it. Yeah.
Great time to stack some BTC, folks. Going to start with some price action. Again, red across the board. Literally the absolute biggest bloodbath possible this week for a multitude of reasons. A lot of macro, a lot of micro. We're going to get into the ByBit hack as well. But Bitcoin down 12% to 85.5K on the week. Ethereum is down 15% to 2.3K per ETH. XRP is down 17% to 220. And Solana got hammered harder than anything else for, I think, the third week in a row. Rachel, down 18% to $1.40. Why did most of this happen? Well, this happened Friday and Saturday over the weekend. ByBit, one of the largest exchanges in the world, got hacked. How did it happen? Who did it? And what happens next?
Yeah, let's talk about it, Matt. So this was obviously the biggest news of the week, end of last week. People are still talking about it this week. So ByBit, one of the largest cryptocurrency exchanges, suffered a major security breach on Friday, leading to the unauthorized withdrawal of over $1.5 billion on liquid stake ETH and Mega ETH. In a significant security breach, ByBit's Ethereum cold wallet interface, known as SAFE, was compromised, resulting in the loss of approximately $1.5 billion in assets. This incident has raised concerns about security measures of centralized exchanges and their vulnerability to sophisticated cyber attacks. ByBit did confirm that North Korean Lazarus Group is behind the hacking, and this is now the biggest hack of all time. I'm going to be reporting on this week as well, Matt, so stay tuned for that article.
Absolutely wild. The wildest part about all of this, Rachel, was the fact that it wasn't even their cold wallets. When the report first came out, everyone thought, oh, their cold wallets were compromised. What are we going to do? Ledgers, Trezors, blah, blah, blah. Turned out it wasn't the cold wallet. It was Safe, aka Gnosis Safe, one of the largest platforms in the space. They sort of rigged their interface. Pretty crazy. Never want to give a shout out to Lazarus, but these guys are just absolutely brilliant and by far the best hackers on the planet. Moving forward, jumping into meme coins, which are pretty much dead now. Pump.fun, automated market maker, also known as AMM rumors, triggered a 28% decline in Raydium as the Solana battle continues. A rumor suggested that Pump.fun is going to create their own AMM. This literally tanked Raydium 28%. Raydium is still down, and if this is implemented, the development might reduce the platform's reliance on Raydium as the decentralized exchange that currently facilitates trading for tokens graduated on Pump.fun. Speaking of a little bit of degen stuff, one of the best, if not the best, TradFi platform in the world, Robinhood, says the SEC has dismissed its crypto investigation.
Yeah, so this is good news. Let's talk about this. The SEC officially ended its investigation into Robinhood Crypto on February 21st, 2025, without pursuing enforcement action. This move, together with the SEC dropping its lawsuit against Coinbase, indicates a broader shift towards lighter cryptocurrency regulation under the current administration. Robinhood has urged the SEC to transition from enforcement-based regulation to establishing clear, structured guidelines for digital assets, which I think we're starting to see as the Trump administration pushes forward. So this is really good news.
Phenomenal news. Moving forward, guys, more centralized exchange news. And this next piece of news is going to tell you how big these centralized exchanges truly are and how much money they print. OKX, another one of the biggest exchanges in the world, pleaded guilty over AML violations and has agreed to pay $505 million in fines. And this is for penalties in violating U.S. anti-money laundering laws for the last 7 years. They lured U.S. customers, including many from New York, in contrary to its official policy. They were not allowed to do that. They did. They got caught. They're going to pay a criminal fine of $84 million to settle its extended probe with a regulator, and the parent company has agreed to forfeit a $421 million fee. Guys, this is wild. This will not hurt them at all. ByBit is pretty much completely solvent again and has almost recouped all of their funds. Imagine losing $1.5 billion and not even sweating about it. Absolutely wild stuff. Speaking of centralized exchanges, someone who we haven't heard from in quite some time, and I don't miss this guy at all. Jailed FTX founder SBF tweeted from jail, and it made the native token FTT rip 30%.
Yeah, this is crazy news, Matt. So the now defunct FTX crypto exchange head, Sam Bankman-Fried, aka SBF, has returned to social media platform X after 767 days. His comeback briefly spiked FTT token by 30% on Monday night as FTT token spiked from roughly $1.60 to $2.07 following SBF's post. SBF, who is currently serving a 25-year sentence, has posted a thread on X expressing his thoughts on the recent U.S. federal layoffs. How did he get his phone in jail? That is pretty wild. And I actually saw his tweets and I thought the same thing. I was like, wow, I haven't heard from him in a while. What's going on here? So this is interesting news.
Crazy stuff from crypto land. Moving forward, Ken Griffin's Citadel Securities eyes the crypto market making on Coinbase and Binance. This is massive news, guys. Some people say it's a little bearish because he does have a history of short selling. Others see it as extremely bullish, as he only enters arenas where he can win. He's one of the wealthiest men in the United States and a true finance vet. The firm's entry signals a shift to capitalize on competitors' retreat from the U.S. crypto market amid tightening regulations. However, the Trump administration's pro-crypto stance could create a friendlier regulatory environment and encourage institutional participation. This is probably why he's getting in. Huge shout out to Kenny Griffin, Citadel. Hopefully they can work some magic and give us a bunch of liquidity in the market. Moving forward, another week, another strategy buy. And this time, Rachel, he bought $2 billion worth of Bitcoin, and we are down over 10% on the week. Pretty wild stuff here.
Yes. So Strategy, which was formerly MicroStrategy, I had to think about that for a minute. So they've acquired an additional 20,365 Bitcoin worth nearly $2 billion, bringing its total holdings to 499,096 BTC, just shy of the psychologically significant 500,000 Bitcoin milestone. The company's Bitcoin treasury now stands at approximately $33.1 billion, purchased at an average cost of $66,357 per coin, representing about 2.38% of all Bitcoin that will ever exist. That's just so crazy when you think about it that way. Yeah, good for them.
Good for them, but bad for the market. Pretty wild times here. Speaking of Bitcoin and Bitcoin ETFs, the UF spot Bitcoin ETFs saw an unfortunate record. Normally we talk about this, Rachel, and it's a good record. This time it was a record $1 billion in one single day of outflows as 10 of 12 funds reported withdrawals. This happened on Tuesday after they reported their net inflows and outflows. Again, 1.01 billion came out of the 12 spot Bitcoin ETFs, 10 reported net inflows, marking a significant retreat by investors amid broader market volatility. Moving forward, one of the coins that is literally such a weird one. A bunch of my normie friends reached out to me a couple weeks ago and said, hey, Maddie, what do you think about Picoin? Honestly, I thought it was a complete scam. Boy, was I ever wrong, as Picoin has recently smashed an all-time high.
Yeah, Matt. So let's talk about it. Pi skyrocketed 56% on Wednesday, February 26, reaching a new all-time high of $2.44 just 6 days after its public exchange debut. Despite an initial wave of selling pressure following the Pi mainnet launch, which saw the token plummet to 6 cents, marking a 64.6% drop from its peak, Pi has staged an impressive recovery, signaling renewed investor interest. One of the few bright spots during the biggest bloodbath of the year. So this is good news.
Wild stuff. And moving forward to something we have yet to speak about, the Ethereum Foundation. Couple shakeups. They've been in the dust and in the dirt for a while. They now have a new president. Aya Miyaguchi transitions to Ethereum Foundation president, focusing on institutional relationships and expanding Ethereum's global influence. This leadership change reflects ongoing efforts to balance decentralization with governance amid community criticism and internal restructuring. Vitalik reaffirms control over the foundation's direction while addressing tensions around transparency, leadership, and community expectations. ETH needed this. Hopefully she can come in and work some magic. Huge news. And ETH's probably biggest competitor now, Solana, has a massive proposal to slash inflation by 80%, and went through, and now it is going to community vote.
Yeah, this is interesting. So Solana's latest governance proposal, SIMD-0228, seeks to drastically reduce Sol's annual inflation by 80%, introducing a dynamic emissions model that adjusts staking rewards based on participation levels. The outcome could redefine staking incentives and reshape the blockchain's economic future. While some view this as a groundbreaking move towards economic sustainability, others fear it could create an imbalance that favors large stakeholders at the expense of decentralization. The proposal is set for voting in Epoch 753, expected to begin on March 6th. If passed, Seoul's emissions would drop from 4.5% per year to as low as 0.87%. Wow.
Absolutely wild. And guys, the last piece of news, this is pretty fresh off the press as well. The House Democrats have proposed a bill to ban presidential meme coins. The U.S. Congress is reportedly set to consider legislation that would ban the issuance of meme coins like President Donald Trump. The Meme Act, which is expected to be introduced on February 27th, will concern the president, vice president, Congress members, senior executive branch officials, and their spouses and dependent children. Pretty wild stuff here. I guess the Dems are not pleased with what Trump did. Looking back at it, I'm not pleased with it either. It definitely had a negative influence across all of the market with the Trump launch, the Melania launch, and of course the Libra launch with President Javier Milei of Argentina. Rachel, what a week. Normally I love doing these with you. This week, I didn't love it that much. This was super negative, and seeing all this red on the board was no bueno. And hopefully we have some green on the board next week, guys, and a bunch of positive news as we enter March. 2025 is going by quick. As always, thanks for tuning in. We really appreciate you guys following along. As always, if you like it, please do subscribe, hammer that like button. And folks, we will see you on the next one, and let's pray for a green week.
Yes, let's do so, and see you guys next time. Thanks. Bye.